the remarkable part of me, and this was the thing that I didn't understand, and I wish I would have understood then, with all of the different LLCs and those structurings and the trusts and all that we end up getting created to put these in my head before I ever went through them, it was my thought was this is going to have to affect the way I run my business in a day-to-day operation.
What's the biggest frustration when it comes to, capital gains tax when you're exiting businesses or real estate and or the 1031 exchange?
Yeah. So in my world, going back to how we had that initial conversation of how to create the buyout, that was where it really started with how much do I need to get paid the day to keep it going? And then essentially I self-finance my own exit for the partners that stayed in that first rental company. And so from a tax perspective, learning how to do that correctly was a nightmare because I knew the structure I wanted to do. I wanted to get paid, enough up front where it was worth it to me, I guess is the way to put it. Well, there was also enough that they still owed me where it would be a nice couple checks for a couple of years. So from a pure, looking at the tax accounting standpoint, I probably did that as wrong as you possibly could have. And this would have been in like my third year of doing this. So we're talking 2014. So 8 years ago or so. And like I said, I walked into the most expensive way I could have cut those checks to the IRS. And it was at that point where I sat down with my accountant, who's also an attorney, which is great. And we just hammered out a lot of new structures for my business of how to do things and how to do things correctly, the kind of shells to put them in, to the point where I admit that it's not my expertise, despite the accounting degree. But I do know the essence of what he's doing, the legal of how it's all done. That's all I look at is what I pay him for. You know what I mean? So, but the remarkable part of me, and this was the thing that I didn't understand, and I wish I would have understood then, with all of the different LLCs and those structurings and the trusts and all that we end up getting created to put these in my head before I ever went through them, my thought was this is going to have to affect the way I run my business in a day-to-day operation. And in reality is until it comes time to actually doing our taxes, it doesn't apply at all. Like it has not affected the way that I operate, whether it be with my partners or with my clients at all. There's a couple of different forms they sign. For instance, whenever I'm doing a rent to own with a tenant, we do it a little bit differently than I had before. But other than that, it's basically just beautiful and it's set up really well. So that was my fear going into the how to really build the tax shelters as I heard them. It was like, it's going to change the way I do my business. And it didn't at all. And it made me really glad that it was there. Also made me really upset. Like, why didn't I look into this sooner? Like all the money I throw away and I gave to the IRS, like we could have done something about this. It could have been much better.
Excellent. Yeah. So just hiring the who, not being the how again. And then also just wishing you would have set up some structures sooner in a way that, not realizing that it's really not going to affect the way you're running your business. You just have to have it all structured in a certain way. Is that a fair summary?
Yeah, exactly.
Cool. Have you ever done a 1031 exchange before, by the way?
We have. Again, I not knowing what I know now, I would not have done it with that particular property. But it is what it is, and moving on.
When you say that, I'm curious, like what was the story there? What made it not a great deal?
It wasn't necessarily anything to do with the houses at all. It had to do with the fact that we were trying to dissolve that entity. Like the partner just wanted to be done. And the fact that we were taking a carryover and putting it into more, it just extended the relationship when it shouldn't have been extended. I mean, that's, I guess, the way to put it.
Yeah, there's a thing called the whole entity must move, right? So if you're going to do a tax deferral, that means the partners typically have to stay married, if you will. And sometimes partners want to separate for different reasons, right? They want to go their separate ways. They have another investment opportunity, but all of a sudden, oh no, we can't defer the tax via a 1031 exchange unless all of us stay together, generally speaking. By the way, we have a solution for that. It's called a deferred sales trust. If anyone's married, anyone's worried about staying married to a partner and want to separate, we just had a $13 million deal in San Diego, and it was 4 partners. And one of them just wanted to pay his tax, so he paid it. The other 3 didn't want to do a 1031 exchange because they develop properties, car washes. They buy land for about $500 develop it for about 3.5 million, and they sold it for 13 million.
Mhm.
And so they're like, we don't want to go buy something for 13 million and all stay together. Can we go our separate ways? And the answer is yes. So each of them can get a deferred sales trust, not to be confused with the Delaware statutory trust, defer all their tax, and they can still go into deals of their own or with each other if they want to, but they don't have to. They can be passive retired, which one of them is he's a little older, wants to kind of retire. The other ones are younger and still want to be entrepreneurial. But the point is, it's like Netflix. It's very flexible and versus like a Blockbuster that's pretty rigid.
Mhm.
So if you want to learn more about that, anyone who's listening, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com.